How's it going, investors? I'm Ari Gutman here with the TipRanks team, and guys, today I'm incredibly excited to dive right into what I believe is one of the most powerful tools on the market for the retail investor. That's the TipRanks website traffic tool. So without further ado, let's dive right in. As investors, it's certainly our job to perform all of our due diligence and of course continue to compile all the information that we can to make an informed investment decision. Now, we often collect information on companies based on their balance sheet, from revenues and profits to their liabilities. But this is only after the quarterly reports come out, and that may be too late, which is precisely why our TipRanks website traffic tool can help you drive some serious results and returns, if that is in fact what you're looking for as an investor. Now, in short, the tool itself analyzes website traffic volume of companies and displays an estimate of how many consumers are actually visiting a company's website. What is more is that this is directly correlated to the company's stock share price. So let's go ahead and pull up TipRanks right now to see exactly how this works. For the purposes of today's video, and because, well, retailers are reporting earnings this week, I want to use Walmart as our first example. So we'll go ahead and head over to Walmart's page, and we can see that Walmart has not exactly had the greatest of years, but investing is not about the past, it's about the future. If we click over to website traffic, we can see a peak amount of visitors to walmart.com in December of 2021 with a share price of $143 per share. But by February, we see a decline in visits to Walmart and a decline in share price as well to $134 per share. Where exactly am I going with this? Well, Walmart is about to report earnings, and we can certainly already see that Walmart has been able to attract consumers back to their site, and Walmart being a retailer means that consumers are likely going to walmart.com to proceed to actually make a transaction, which means that come to their earnings, we should see growth, and their predicted growth means a profitable ROI. Now, if Walmart didn't quite excite you, I want to go ahead and jump right into Alibaba, a stock that was recently, just pummeled by the market. We can see that Alibaba is down on the year, especially after China's recent election news, by over 41%. Now, they started in June of 2021 with over 386 visits to Alibaba.com with a share price of around $227 per share. But by April of 2022, we see a share price of just $97 per share, which correlates to visitors to their site, which we can see fell to only 223 million visits. Now again, no one is going to Alibaba.com just to look at how colorful household products are or to admire the platform itself. They're likely there to actually make a purchase. And all of those transactions lead to overall profits. So here we are with Alibaba launching back up to 362 million users on their site. Now the questions become, how likely is it that Alibaba is going to report greater profits this week? How are these profits going to impact their share price? And now most importantly for you as an investor, well, because this tool is now available to us all, are you ready to start investing like a pro?